Hello, everyone. Welcome back to Virtual Finance Seminar Series in Corporate Finance and Investments. I'm Nur Ershine from MSU, and I'm joined by my colleague and co-organizer, Andrew Botnerick from UIC. We have a distinguished guest today, Miguel Ferreira from NoSPE. Before giving the floor to Miguel, basically, I would like to remind a couple of rules. The seminar is like 1 hour, 15 minutes. And you will all be muted. But if you have a question, feel free to type it in the chat. And when the time comes, one of the moderators will basically read it. Okay then, thank you very much for coming again. And Miguel, the floor is yours.
Thank you, Nuri. Good afternoon. Let me first thank the organizers for putting together this excellent seminar series, Nuri, Ryan, and Andrew. So it's a pleasure to present in this series. So this is a relatively recent paper. So the paper is about financial constraints and entrepreneurship. So the title of the paper is "Which Entrepreneurs Are Financially Constrained?" This is a joint project with my colleague, Francisco Queiro at Nova SBE, and also Marta Lopes at the Universidade Carlos III in Madrid, and Hugo Reis at the Bank of Portugal. So let me first start by motivating why we're studying financial constraints in entrepreneurship. So from the point of view of the public opinion, financial constraints are very often cited as one of the main barriers to firm creation and entrepreneurship. So this figure shows you the results of a survey done in Europe, where sufficient capital and financial resources are cited as the most common barrier to entrepreneurship. Economic conditions are also cited, or lack of skills or education are also cited, but more than 20% of people in this survey cite that lack of financial resources is a reason why they cannot start a new business, a reason why they cannot be self-employed. From the academic literature point of view, so the relation between financial constraints and entrepreneurship has been studied for many years. However, the evidence is mixed. So we have, from a long time ago, evidence showing that personal wealth is positively correlated with entrepreneurship. But this can be driven by other reasons. It could be driven by ability or preferences, as they are related with wealth. More recently, there's some papers that provide evidence supporting a causal effect of financial constraints on entrepreneurship. So they rely on shocks to house prices, to shocks to the value of housing collateral. And they find an increase in entrepreneurship when there's an increase in housing prices. However, this relation can also be driven by other factors, and there's a recent paper showing that changes in local demand can explain this effect, can explain a large part of the effect of shocks to house prices on firm creation. A second important point from the academic point of view is that only a subset of entrepreneurs typically have the skills and desire to grow their business. And hence, only this set of entrepreneurs drive aggregate job creation and economic growth. And this is a relevant and important question in the entrepreneurship literature, is what are the entrepreneurs that have the skills to grow their business. And we know very little about which type of entrepreneurs, and in particular, if these entrepreneurs with the skills and desire to grow are the ones that are more affected by financial constraints. So there's a lack of evidence on which type of entrepreneurs are more affected by financial constraints. And in particular, we want to show if high potential entrepreneurs, growth-oriented entrepreneurs are affected. So what we're going to do in this paper? So we're going to address the question of how do financial constraints affect different types of entrepreneurs. And to try to provide an answer to this question, we're going to rely on a Portuguese public program that allows individuals on unemployment insurance to collect upfront their full benefits if they want to start a business. What are the main advantages of our setting, and that will allow us to identify the effects and also to examine which type of entrepreneurs are more affected by financial constraints? And there's three key advantages. One first advantage related with identification is that we're going to be able to identify the effects of access to funding through the program using age-based discontinuities. So we're going to explore exogenous variation in the amount available to these to entrepreneurs in this program, and so our results are unlikely to be explained by an unobserved determinants of entrepreneurship, such as ability, preferences, or wealth. So we're just going to rely on these discontinuities, on the amount available to workers based on age, to identify the effects of access to funding on firm creation. A second advantage is that we're going to exclusively rely on individual level variation. So this has the advantage that our results cannot be explained by local demand shocks. And the third and important advantage is that we have a unique data set that is going to allow us to identify which type of entrepreneurs are more affected by financial constraints. So we are going to be able to link more than 2 million eligible workers to the financial statements of the firms they create. And this is going to give us sufficient variation in skills, in industries, and in outcomes over multiple years, so over multiple business cycles between 2015 and 2016, to allow us to identify where financial constraints affect more entrepreneurship. I don't know if there is any question at this point.
Not as of now, Miguel.
Okay, so let me give you a bit more details about this public program we're going to use. So the program is called the Single Amount. So as in most countries, in Portugal, unemployment insurance benefits are paid on a monthly basis. In the Portuguese case, the duration of your benefits depend on two variables, age and job history. One nice feature of the unemployment insurance is that the benefit duration is going to increase discontinuously at ages 30, 40, and 45. And that's what we're going to explore in our setting. So the unemployed people that decide to select to participate in this single amount program, they have the possibility to collect the full amount of their benefits up front if they want to start a business. And what we're going to exploit is that these discontinuities in the duration of the benefits are going to generate discontinuities in the amount available to start a business by someone which is on unemployment insurance. Can these amounts realistically affect the ability to start a business? We think so. So the average amount available is about 11,000 euros. And the increase in the amount around the age cutoffs that we're going to explore range from 2,400 euros at age 30 to more than 4,500 euros at age 45. Although these amounts seem relatively low, if you put it in perspective and compare what with the median initial equity and assets to start an incorporated business in Portugal, we can see that these amounts are 5,000 and 20,000 euros. So the amounts available through the program are relevant given the typical size of the funds that are necessary to start a business in Portugal. And these amounts are not specific to Portugal. So evidence from the US reports similar values in terms of the amount you need to start a new business. A final aspect about the program, which is actually a quite important rule, is that if you decide to participate in the program and you receive your benefits up front, you must repay back the full amount if you want to earn any type of labor income in the next 3 years. So if, for example, if your business fails, and if you want to get a job within the first 3 years, you need to repay back the full amount you received. So let me do an overview of the results, what we find. So the main finding in the paper is that access to funding through this program increases the entrepreneurship rate by 0.12 percentage points. This represents about 11% of the average entrepreneurship rate. So it's an effect which is economically, not only statistically significant, but also economically significant. Then we're going to see which type of entrepreneurs are more affected. And we see that the effect of the access to funding on entrepreneurship is stronger for incorporated entrepreneurs. And the effect is twice bigger than the baseline effect at 0.29 percentage points. And the effect is particularly stronger if you look at the entrepreneurs that are in the top decile of the wage distribution before unemployment. And this is an indication that it's talent, people with talent and people with skill and ambition to grow. So growth-oriented entrepreneurs that are seem to be more affected by financial constraints. The access to funding increases the survival rate of the firms created in the program relative to the average firm created in the economy. And an important point is that we don't observe a decline in the survival rate after age 3. So you may be concerned that people use strategically the program to receive upfront the benefits of the unemployment insurance, and then they close the business after year 3, when the rule to repay back the amount expires. But we actually don't see that there is an increase there is no decline in survival after age 3. So it doesn't seem that the evidence supports the idea that people are just using this to receive in advance the benefits. And finally, we find that the effect of the access to funding is stronger for incorporated firms in the upper half of the size, growth, and profitability distributions. And the conclusion is that financial constraints matter, and they seem to hamper growth-oriented entrepreneurship.
So, Miguel, there are a couple of questions.
Yep.
So the first question is basically a clarification one. So is UI related to their rate before unemployment? The UI
related, I'm sorry, I couldn't hear
the UI benefit related to people's wage before unemployment?
Yes, so it depends on age, it depends on your job history, and also it depends on your previous wage. Although there is a cap, and the cap is about 1,000 euros per month. So even if you make much more than 1,000 euros, it's going to be capped, the maximum benefit.
I see. Another question is, what is the average wage of people who lose their jobs?
Okay, so I'm going to show you statistics on unemployed people that are on unemployment insurance a bit later on.
I see. I think another question that I will ask is that, so you are looking here at the entrepreneurial activity who are unemployed, right? So yes. Is this entrepreneurial activity representative of the overall entrepreneurial activity in the economy, or?
I'm going to show you later also statistics on that, but actually the unemployed people do not differ dramatically from the population of workers. But okay. I'm going to show you the statistics on the characteristics of unemployed people versus employed people.
We have one more question, actually, then we can move on. So lower skilled individuals are more likely to see employment in the shadow economy. Would that affect your results on pre-unemployment wage and success of new businesses?
I'm not sure. I don't think that will be the case, but let me show you the statistics, and then we can compare the employed people with unemployed and make a conclusion about that.
Sure.
Okay, so let me continue. So one question you may have is if we really can interpret the effects as the effect of financial constraints, or could the effect of the program operate, for example, through changes in preference? So higher wealth, shock to wealth may reduce risk aversion or increase preferences to be your own boss. We don't believe that's what we're going to capture in this case. We don't think that it's a wealth effect that is driving the results. So if you, for example, you compare with the effects in Hurst and Luzardi, they find entrepreneurship to rise just 0.005 percentage points per 1,000 euros of wealth. And this would only account for 4% of our baseline results. So the effect we find is much larger, and we don't think a wealth effect could explain the results. And also remember that one of the rules of the programs is that attenuate any potential wealth effects is that the amount must be repaid if your business fails during 3 years. And this attenuates any type of wealth effect there may be associated with the program. So we really think that is a liquidity shock, which is a relaxation of financial constraints that is driving the results. A second concern with the interpretation of the results as financial constraints is that you may think participants, as I mentioned before, may strategically select into the program just to collect the full benefits up front. This will be risky, however, because unlike monthly benefits, if you receive up front, you need to repay. You need to repay back if the business fails. So there's a risk associated with collecting upfront the full benefits, while if you receive monthly benefits, there's no need to repay. A second piece of evidence that's why we think that there's no strategy played by participants here is that survival rates should drop off after age 3 if there is this strategic behavior once the obligation to return the funds expires. But we don't find any evidence whatsoever of that. We find that the survival rate actually increases from entry to age 6. So overall, we think that we are to really capturing here, it's the effect of financial constraints on entrepreneurship. So let me put the paper in the context of the literature and what's going to be our main contributions. So there's a large literature, of course, on financial constraints and entrepreneurship that look at the effects of personal wealth, the effects of house prices, or even credit supply. So what's going to be our contribution to this literature is that we're going to be able to identify the effects by exploiting individual variation from these age-based discontinuities in the access to funding. And more importantly, we're going to provide new insights on which type of entrepreneurs, and it's going to be high potential entrepreneurs that are more affected by financial constraints. And I think this result is new in the literature, and it's relevant and important because it's these high potential entrepreneurs that drive growth and job creation. A second literature for which we contribute, it's on unemployment insurance and entrepreneurship, and there's a recent paper by Humbert and co-authors. They also look at an unemployment insurance program in France, but their mechanism is completely different. So the mechanism in the French program, it's downside insurance. If your business fails, you can go back to unemployment insurance, while in the program we're going to use, it's all about financial constraints. So there's no role of the downside insurance mechanism. So we are exploring a completely different mechanism. And finally, a third literature, it's on unemployment insurance and age-based discontinuities. There are several papers. But these papers look at employment outcomes. We are going to focus on entrepreneurship and firm creation, which we think it's an important outcome because we know that it's new firms that drive most of the job creation. So in terms of the data, so the data is quite unique, and that's one of the reasons we're going to use this Portuguese program. So we're going to combine two databases: the Social Security database that gives us the universe of unemployment insurance beneficiaries from 2005 to 2016, and it's going to provide us personal characteristics of people on unemployment insurance, including monthly wages and age. We're also going to have the daily amount and the duration of the unemployment benefits and who participates or not in the single amount program. And we're going to combine this information with financial statements of the companies that are created. So we're going to be able to track over time the performance of these firms that are created through the single amount program. So we're going to have information on industry, on year of incorporation, and balance sheet and income statement information on the firms that are created. So this table summarizes the rules of the unemployment insurance benefits. As you can see, it depends on age in the first column, and there's discontinuities at 30, 40, and 45 years old. The duration of the benefits also depends on the number of months of contributions since your last unemployment spell. And the duration goes from a minimum of 9 months, if you are below 30, to a maximum of 30 plus 8, 38 months, if you are above 45 years old. The rules of the program have changed in April 2012, and as you can see, this was a consequence of the sovereign debt crisis and the financial assistance program of Portugal. And basically, what happened is that the duration was reduced across the board, but we still have the discontinuities at age 30, 40, and 45 that we're going to explore. We're just going to adjust the durations and the calculations of the amount you can receive upfront. So let me show you some descriptive statistics about the workers. So one important information is going to be age. The column 1 shows you the distribution of age for employed people, column 2 for unemployed people that are on unemployment insurance, and finally column 3 shows the age distribution of people that select into the program to receive the benefits up front and create a business. As you can see, the distribution of age is similar between employed and unemployed people, so there's not a big difference. So the average age of an employed individual is 37 years old, so it's not very different from employed individuals. People that select into the program are a bit older. So you can see that the mean and the median of people that decide to create a business using this program is higher relative to unemployed and employed people. So we have a total of more than 2 million people in unemployment insurance over the sample period, and about 1% of people that are on unemployment insurance decide to create a business during our sample period. These are the statistics on wages and the potential amount you can receive up front. So as you can see, unemployed people average wage is a bit lower than employed people. And one interesting characteristic is that people that select into the program, they have higher wages than both unemployed and employed people. So this is the first indication that people that decide to use this program to create a business are people with high potential, because if you measure potential by the previous wage, both in terms of mean, median, and at the top percentile, these people that create a business using this program have higher wages. As a consequence, we can see that the potential amount that these people select into the program has a higher mean, and also it's the potential amount that people select into the program at the top percentiles is also higher than relative to unemployed, the average unemployed person. And finally, we have there's some descriptive statistics here about the firms that are created. This is the sales at entry, at age 2, and at age 4 for all firms created and for firms that are created through the program. And as you can see, the typical firm that is created through the program, the average firm created through the program, is somewhat smaller in terms of size, measured by size relative to firms that are created in the economy. That's also true in the top percentiles. But interesting, if you look at the survival rate, it seems that these firms that are created through the program, they survive longer than the typical firm that is created in the Portuguese economy. So at age 4, the survival rate for firms created through the program is 78%, compared with 64% for the typical firm created in the economy. Let me do a break here. So is there any question?
Yes, Miguel,
Yep.
there are some questions. So the first question is, could the results here be driven by change in reporting rather than change in real activity? With a small subsidy, you do not register the business and cheat on taxes. With a larger subsidy, register a business because the subsidy outweighs the benefits of tax evasion.
Okay, so we're going to look at incorporated firms. And so these are the firms that have the higher potential, and the firms that have the higher chances of growing and become more profitable and productive.
Okay, so the second question is, will you be able to show that higher wage before unemployment represents skill and simply not connections? Is it a good proxy for skill, basically?
So we cannot measure connections, but we think that the previous wage is capturing, on one end, is capturing skill and talent. I think it's a good proxy for that. In addition, I think we also capturing what is the outside option of people that decide to create a business through the program. However, we don't have data on connections, so we cannot definitely tell if connections could also be playing a role. But in any case, remember that in our design, to explain our results, it should be some characteristic that also changes discontinuity in a discontinuous way around the age cutoffs. And I think there's no reason to believe that that connections change in a discontinuous way at the age cutoffs. So it's not plausible that connections could explain our results.
Okay, thank you, Miguel. We can move on.
Okay. Okay, finally, the last descriptive statistics is about in which industries firms are created through the program. As you can see, about 30% of the firms are in wholesale and retail trades, and that percentage is much higher than in the overall population of firms created. There's also a significant number of firms created in the accommodation and food service activities, also in professional, scientific, and technical activities, and also in manufacturing. And in all these 4 examples of industries where firms are likely to be created through the program, the percentages are significantly higher than the overall population of firms created in the economy. So this figure, this first figure, shows our identification strategy. So it represents the potential amount as a function of age. And as you can see, there's the potential amount jumps at exactly the age cutoffs, 30, 40, and 45 years old, which is just a consequence of the rules of the unemployment insurance, and that the amount that you can receive upfront depends on duration, which depends on age. If in fact access to funding, this potential amount affects entrepreneurship, then we should observe that the probability of creating a firm is also going to change discontinuously at exactly the same age cutoffs. And that's exactly what we observe. So if we look at the entrepreneurship at the age cutoffs, we also see that it changes the probability of creating a firm, changes discontinuously at 30, 40, and 45 years old. And that's what we're going to show you in a more formal way in the next slide. So our research discontinuity design, so our RDD design, implies that only characteristics that change at these age cutoffs in a discontinuous way could explain our results. And we can validate this assumption by looking at the distribution of age. So this figure shows you what's the distribution at age at the time of unemployment. And and you can see that the distribution of age evolves relatively smoothly at the age cutoffs. There's a bit of bunching, but only within 1 or 2 quarters of the age cutoffs. But I'm going to show you a bit later on results that try to address this potential concern. We also can look at the distribution of wages to see if the distribution evolves smoothly. And we also see that the distribution of wages seems to evolve quite smoothly at the age cutoffs. There's again a bit of bunching within 1 or 2 quarters of the cutoffs, but we're going to try to address this concern in our empirical results. So we're going to combine the age cutoffs using an IV specification. So the first stage is we're going to run a regression of the potential amount on the 3 age cutoffs. And then we're going to use the predicted potential amount to estimate what's the effect of the access to funding on the probability of creating a business. We're going to control for quadratic polynomials in age that are going to allow for different coefficients around each cutoff. So this table presents you the main results in the paper. So column 1 and 2 presents the first stage results where the dependent variable is going to be the potential amount. Column 1 does not include covariates. Column 2 includes covariates. Covariates are region, nationality, and gender dummies. As you can see, the results are very similar, including or not covariates. The first stage shows you what's the increase in the potential amount around the age cutoffs, 2.4, 3.2, and 4.5 thousand euros. And that positive and significant, the effects. Columns 3 and 4, it shows the reduced form estimates, where the dependent variable is going to be it's going to be entrepreneurship as a function of the age cutoffs. As you can see, the effects are all positive and significant at the 3 age cutoffs. And final column 5 and 6 combine the 3 age cutoffs using the instrumentable variables specification. We're going to focus on these estimates in column 5 and 6. You can see that including covariates or not does not affect the results. And the effect is the effect of the potential amount of the access to funding through the program on entrepreneurship is positive and significant at 0.12 percentage points. Taking into account that unconditional probability of creating a business is about 1%, this additional 1,000 euros of funding increase the probability by about 11%. So this is an effect which is statistically significant, but also economically significant. So 1,000 euros more of additional funding increases the probability of entrepreneurship by 11%. Is there any questions at this point?
Yes, Miguel. There are some questions. The first one is there any chance that individuals close to age thresholds strategically manipulate their employment outcomes in order to have access to this funding?
Yeah, we don't think that's the case, but I'm going to show you evidence where we're going to directly try to address that question by excluding observations around that are very close to the age cutoff. I'm going to show you show those results in a second.
Okay. Okay.
And in addition, remember something I'm going to show you in more detail later on is that if that's the case, so if we think people are using strategically the program just to receive upfront the benefits, we will see a decline in the survival rate after age 3 when the obligation to give back the benefits expires, and we don't see any drop in the survival rate after age 3. So there's no indication that people are using strategically the program.
Okay. The second question is about the industry table that you showed. Is there anything like we can learn from that table related to financial constraints, in the sense that in some industries, the initial entry cost is lower than other industries? So maybe 4,000 euros is not likely to make much difference at those industries than other industries. Did you make any such test?
No, so I think actually that's an excellent suggestion. So we could look at startup capital by industry and try to see if the industries that require more or less startup capital have different effects. It's something we haven't explored, but we could definitely explore.
Okay, we can move. Thanks, Miguel.
Very good. So remember that one concern you may have is that there is some bunching around the age cutoffs when we looked at the distribution of age and also at wages, a distribution of wages. So what we do in this approach, which is called the Donuts RDD approach, is we're going to exclude observations that are very close to the age cutoffs. So in column 1, 2, 3, we exclude observations within 1 month, 1 quarter, and 2 quarters of the age cutoffs. The IV results in column 4 and 5 and 6 show you that the estimate is basically the same at 0.12 percentage points, even if we exclude observations that are very close to the age cutoffs within 1 month, 1 quarter, or 2 quarters of the age cutoffs. So it doesn't seem that that this potential bunching around the age cutoffs is driving in any way our results. So what we're going to do next? So what we're going to do next, and that's actually an important part of our contribution, is to look at the heterogeneity of the effect. So we're going to try to see where the access to funding seems to have a larger effect in terms of entrepreneurship. And the first approach is to look at incorporation, because incorporation is a good proxy for high potential business or for growth-oriented entrepreneurship. So there's a trade-off between limited liability on one hand, and on the other hand, if you incorporate, you have to pay higher taxes and you are subject to heavier regulation. But typically incorporation is a good proxy for growth-oriented entrepreneurship. If you look at some statistics in the figure, you see that incorporated firms represent about 30% of the firms, but in terms of employment, they represent more than 80% and more than 90% of sales. So it's really incorporated firms that have an impact on aggregate growth and job creation. So it's important to see what the effect of the access to funding on incorporated firms versus unincorporated entrepreneurship. So what we're going to do is we're going to redefine the dependent variable, that it's going to take a value of 1 if an individual participates in the program and if it incorporates on one end, or on the other end if it doesn't incorporate. So we're basically going to estimate separate IV regressions for incorporated and unincorporated businesses. And these are the results. So focusing on columns 3 and 4 that combine the 3 age cutoffs using the IV specification, you can see that the effect is positive and significant for both type of businesses, but the effect is much stronger for incorporated businesses. So the effect is 0.29 percentage points. So more than twice than our baseline effect of 0.12 percentage points in the case of incorporated businesses. So this is an indication that it seems that financial constraints matter for those type of firms that are more important in terms of job creation and growth, which is incorporated firms. So this is an indication that financial constraints matter for high growth entrepreneurship. A second heterogeneity test is that we're going to explore pre-unemployment wages, previous wages, as a proxy for the exit potential for entrepreneurship. So wages are a common measure of human capital on one end. So it could measure what is the potential to create businesses that are high growth. And also wages are a measure of outside options. So it implies that people with higher wages, they're going to be more selective in terms of entrepreneurship opportunities. So what we're going to do is we're going to estimate the effect of access to funding for wage percentiles. So we're going to define PI as the wage percentile for worker high in the overall population of workers. And we're going to estimate separate regressions for each wage percentile. And what we're going to do, we're going to weight observations, and the weights are going to decline linearly with the distance to P. And we're just going to assign positive weights for the percentiles which are within 10 percentiles of P. So we're going also to estimate these, implement this procedure separately for incorporated and unincorporated businesses. So this figure shows you the results across the wage percentiles. So for unincorporated businesses, you can see that the effect of access to funding is quite stable and small. But when you focus on incorporated businesses, you see that the effect of wages, the effect of access to funding across the wage percentiles, it's stronger in the upper half of the distribution of wages. And the effect is particularly stronger at the top deciles of wages. And this indicates that it seems that financial constraints and access to funding seem to be particularly relevant and important for people with high potential for growth-oriented entrepreneurship. If we take wages as a proxy for high potential and high growth entrepreneurship. We also look at heterogeneity in terms of industry. So we're going to estimate separate IV regressions for different industries. As you can see, the effect is significant for several industries: for manufacturing, for wholesale and retail trade, for information and communication, for professional, scientific and technical activities, and also for human health and social work activities. I don't know if there is any question at this point.
No, Miguel, we don't have a question right now. Okay.
So in the final part of the paper, what we're going to do, we're going to look at post-entry performance. So the way we're going to approach and see what is the performance of these firms. So what's the impact of access to funding on the post-entry performance is that we're going to define the dependent variable. If workers participate in the program, if they incorporate, and if the firm survives until a given firm age, and then we're going to estimate separate IV regressions by firm age. So what we want to investigate with this survival analysis is to see what's the impact of the access to funding on the survival rate. And in particular, we want to see if after age 3, there's a decline in survival rate, because you may be concerned that people are just using the program to receive upfront the unemployment insurance benefits. And then after age 3, when it expires the obligation to give back the funds, they just shut down the business. So what are the results? We see that the access to funding leads to the creation of firms that are more likely to survive than the average firm in the economy.
The effect is quite it's quite stable from age 1 to age 6. If anything, the effect on the survival rate increases over time. And also very important, you can see that there's no drop-off in survival at age 4. So there's no evidence that people are just waiting for age 4 to close the business and strategically use the program to collect upfront the full benefits of the unemployment insurance. We're also going to look at other measures of post-entry performance. We're going to look at firm outcomes. We're going to focus on age 4. Why age 4? Because it's when the obligation to return the funds expires. So we feel that it's a good approach to look at firm outcomes at age 4 because it can give us a better assessment of the post-entry performance of the firms that are created through the program. So how are we going to estimate the effect of the access to funding? We're going to look at outcome percentiles. So we're going to define S to denote the set of workers in our sample that participate in the program, incorporate their business, and the business survives until age 4. And then we're going to define PI as the outcome percentile of worker I in the overall population of firms in the same cohort and the same age. And then we're going to estimate separate regressions for each firm outcome percentile P, where the dependent variable is going to decline linearly with the distance to P. So again, we're just going to assign positive values to the dependent variable in the case of the percentiles which are within 10 percentiles of P. So the dependent variable is going to take values between 0 and 1, and the dependent variable value is going to decline with distance linearly with distance to P. So a first outcome we're going to look it's the level of sales. So as you can see, the level of sales, the effect of access to funding on the level of sales by percentiles. You can see that the effect of the access to funding seems to be stronger in the upper half of the distribution of sales. And in particular, the effect is statistically significant above the median of sales. So this is, again, it's an indication that financial constraints seem to be particularly relevant for high growth entrepreneurship. We also look at the growth of sales. We see a similar pattern. So it seems that the effect is more pronounced, is larger in the upper half of the distribution of firm sales growth. We also look at the distribution of other outcomes. We look at productivity. And we see that the effect is also more pronounced in the upper half of the distribution of productivity. And finally, we look at assets. So the pattern for assets, it's slightly different. We can see that the effect is not as pronounced in the upper half of the distribution of assets. And this is plausible because if you think of the amounts that are available through the program, the amounts are not large. So it's not likely that you are able to create a firm which is very intensive in assets and requires a higher initial capital. Let me stop here. Is there any question?
Yes, Miguel, there are some questions. So the first one is, aren't high-wage people also likely to have easier access to outside capital from banks, for example, if they decide to become an entrepreneur? So isn't this surprising that these people are the ones that benefit from the relaxation of financial constraints in your setting? So how to interpret this?
Okay, so I think that's a very interesting question. So something we haven't explored yet is if the fact that you have access to funding through this program makes you more likely to have better access to credit supply, to bank loans. And that's something we haven't investigated yet, but it's definitely something that we we're going to address when we're going to revise the paper. Okay. It's something that it could play a role here. That the fact that you have better access to funding through the program gives you also better access to funding through the banking system.
Okay, so I think I have a comment maybe here, is that like when we talk about like high growth entrepreneurship, so do we know how much they contribute to the creative destruction here? I mean, like, what do you mean by high growth exactly here? Is like, or do we know whether they get VC funding in the future, or maybe even like how big they become over the time, basically in the long run, and maybe even an IPO?
So I think there's going to be very few or hardly any firm that is going to do that has done an IPO in our sample. So these are much smaller firms. By high growth entrepreneurship, we mean that it's firms that grow faster, firms that are larger and more productive than the typical firm that is created in the economy. And we also, by high growth entrepreneurship, we mean that it's firms that are created by people with high potential, as measured by the previous wage.
I see. Thank you, Miguel. So there is no more question right now.
Okay, thank you. Okay, so let me conclude. So in this paper, we address challenges on the literature of the effect of financial constraints in entrepreneurship. We address two challenges that are still open questions in these open issues in this literature. One is identification to establish a causal effect. Another challenge is that our data, unique data, allow us to address is which type of entrepreneurship is affected by financial constraints. We have very little evidence about that. We believe we make progress on both challenges. So in terms of the identification, we exploit these age-based discontinuities in access to funding from a public program for recipients of unemployment insurance, which give us a good identification strategy to that there's actually a causal effect of financial constraints on entrepreneurship. And more importantly, because we are able to link entrepreneurship from creation to measures of ex-ante and ex-post performance of entrepreneurs, we can tell where financial constraints matter more. So which type of entrepreneurs are more affected by financial constraints. We find that access to funding increases in entrepreneurship, and the effect is stronger for incorporated entrepreneurs, which typically have more ambition to grow and higher potential, particularly those at the top decile of the previous wage distribution. This is also an indication that it seems to be that high potential entrepreneurs are more affected by financial constraints. We also find that the effect is stronger in the upper half of the size, growth, and profitability and productivity distributions for incorporated businesses. So in summary, we conclude that financial constraints matter, and more importantly, they seem to hamper growth-oriented entrepreneurship. Thank you for your attention. I don't know if there are more questions.
So as of now, I don't see more questions, but like you can always type in the chat or send direct emails to Miguel. So then thank you very much again. And thank you very much, Miguel, for the presentation, for this very, very interesting paper. And we are looking forward to seeing all of you again at the same time next week. And next week, basically at the same time and at the same day, we'll have Jessica Jeffers from University of Chicago. So until next week, stay safe and well, please. Have a nice week.
Thank you for the invitation, and thanks a lot for your feedback.
Thanks, Miguel. Can you stay for a couple of minutes, Miguel?
Sure.
Okay.